Hey everyone, welcome back to Corporate Decoder, the place where we untangle the hidden stories inside company reports. Today we are diving into Hanesbrands Inc.'s quarterly report. This filing shows us a company in transition, navigating big strategic shifts and a major pending acquisition. Hanesbrands Inc. just dropped its quarterly report for the period ending the 27th of September 2025. It's a look at how the company is doing right now, just as it's in the middle of some pretty massive changes. Stick around because we're going to break down what these numbers really mean for the future of this iconic apparel company. Before we jump in, if you appreciate these deep dives into financial reports, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these things too. Now, Hanesbrands has been keeping a close eye on its valuable assets like goodwill and intangible assets. These are things like brand names and customer relationships that have a long-term value. They have to check on these at least once a year or more if something significant happens that could make them worth less. They do this by estimating what these assets are worth. For the quarter ending the 27th of September 2025, they completed this check, and good news, no big write-downs needed for their goodwill. However, they did notice something important. For their Australia business, the value of their goodwill is getting closer to its carrying amount a bit more than they would like. This is due to tough economic conditions affecting how much people are spending. This means the company's goodwill in Australia is now at a higher risk of needing to be written down in the future if things get even tougher economically. The carrying amount of this goodwill was about $238 million on the 27th of September 2025. They also looked at their indefinite-lived intangible assets, which include some key trademarks. Again, no impairment was found, but they did see a notable drop in the value cushion for certain trademarks in both Australia and the US for the Australian business. The trademark's fair value is now almost the same as its carrying value. In the US, the trademark's value is only about 10% above its carrying value. This also means these trademarks carry a higher risk for future impairment if economic conditions worsen. The carrying value for these trademarks in Australia and the US were around $230 million and $209 million respectively. One of the biggest stories here is the company's decision to exit the Global Champion business, the US-based outlet store business, and the Champion Japan business. They started reporting these as discontinued operations in 2024 and showing them as assets and liabilities ready to be sold. The US outlet store business was pretty much wrapped up in July of 2024. They sold the intellectual property and some operating assets of the Global Champion business in September 2024, and then a bit more in January 2025, and they are still working on selling the Champion Japan business. This whole process of selling off parts of the company can really change the financial picture. Now let's look at the money coming in and going out. For the third quarter of 2025, Hanesbrands' net sales were around $892 million. This is a tiny bit lower than the $900 million they reported for the same time in 2024. But even though sales were slightly down, their operating profit actually jumped up significantly. It went from about $94 million in 2024 to $108 million in 2025. This is a 14% increase, which means they are making more money from their core operations. As a percentage of sales, operating profit improved to 12.1% from 10.4%. This is a really good sign, showing they are managing their costs better and their core business is performing stronger. When we look at the cash flow statement for the 9 months ending the 27th of September 2025, we see a pretty big change in how the company is generating cash. The biggest difference is in financing activities, where they had net cash provide of $40 million, a big swing from the $40 million used in the same period of 2024. This was mainly due to a lot of borrowing and repaying on their credit facilities, and also paying off some senior notes as they refinanced their debt structure. However, on the flip side, operating activities actually used cash in the first 9 months of 2025, with $44 million of cash used. This compares to cash provided by operating activities of $197 million in 2024. This is a pretty big shift. The company says this change in operating cash flow is mainly due to higher inventory levels and increased costs related to tariffs, as well as higher payments for compensation and taxes. This shows that while the company might be improving its profit margins through cost savings, they are using up more cash to run the day-to-day business right now. Speaking of debt, Hanesbrands has been busy restructuring it. In March 2025, they really changed up their credit facilities. They got a new revolving loan facility, a Term Loan A, and a Term Loan B. The money from Term Loan A and Term Loan B was used to pay off their 4.875% senior notes that were due in 2026. They also refinanced their existing senior secured credit facilities. As of the 27th of September 2025, their total debt was around $2.37 billion. This is a slight increase from about $2.3 billion at the end of 2024. It looks like they are managing their debt levels, but it is a significant amount of money they owe. Now for the biggest news, on the 13th of August 2025, Hanesbrands announced they are being acquired by Gildan's Activewear Incorporated. This is a massive deal. Gildan will buy all outstanding shares of Hanesbrands for a mix of Gildan's stock and cash. This acquisition is expected to close in late 2025 or early 2026. If this deal goes through, Hanesbrands stock will be delisted from the New York Stock Exchange. This acquisition is definitely the central theme for the company right now, and it explains a lot of the strategic moves they are making. One of the most striking numbers in this report is the income tax situation. For the third quarter of 2025, Hanesbrands reported a massive income tax benefit of $220 million, leading to a negative effective tax rate of over 400%. This is largely because they released valuation allowances on US deferred tax assets. Basically, they previously thought they might not be able to use some tax benefits in the future, so they set aside money to cover that possibility. Now, they believe they will be able to use those benefits, so they are reversing that allowance, which shows up as a huge tax benefit. This gave them $225 million in discrete tax benefits just in the third quarter of 2025. For the 9-month period, this benefit was similar, around $228 million, showing a significant financial shift related to taxes. Looking at the 9-month period ending the 27th of September 2025, net sales went up slightly by 1% to about $2.64 billion. But the story here is the operating profit, which soared from $66 million in 2024 to over $342 million in 2025. That's a massive increase of over 400%. This huge jump is largely driven by a big decrease in restructuring and other action-related charges, which went from $223 million in 2024 to just $8 million in 2025. This means the company is really cutting down on these one-time costs that were dragging down their profits. So what is our take on Hanesbrands Inc? After looking at this report, this company is clearly in a very dynamic phase. On one hand, they are showing impressive improvements in operating profit, especially over the 9-month period thanks to aggressive cost cutting and a significant tax benefit. They are also managing their debt, even though it's still substantial. The divestiture of businesses like Champion is a major strategic move to streamline operations and focus on their core strengths. However, there are some red flags. The decrease in cash from operations is a concern, suggesting that while they are improving profits on paper, they are using more cash to keep the business running. The ongoing economic pressures and the potential impact of tariffs are risks that could affect future performance. And of course, there is the massive pending acquisition by Gildan. This deal brings a lot of uncertainty, potential deal costs, and a significant change for shareholders. The fact that they are selling means they likely see more value for shareholders in this acquisition than continuing as an independent company. Hanesbrands seems to be cleaning house and positioning itself for a sale, which is a bold but potentially rewarding strategy if the Gildan deal goes through and delivers on its promises. That is our breakdown of Hanesbrands Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And definitely subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.